I have a question for you. What like if you had got a bonus tomorrow of let's say $50,000, nice chunky bonus. What 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 are the dumbest things you think you could do with that money?
The dumbest things I could do with a bonus.
Do you think a lot of people are doing?
Okay, like a
You know,
common dumb thing to do.
Yeah.
I told you this before the show. I think the dumbest thing that I could think of offhand would be to put a down payment on like a boat, especially a boat that I couldn't otherwise afford, right? Like get myself, use an asset and use something good and turn it into a negative somehow by getting myself into a deal where I have a personal guarantee on some debt that like I'm not going to be able to service in the future. Just start a negative snowball as opposed to the million positive snowball choices that you would have. That's I think my top worst. Like, turn an asset into a liability.
They say that the best days of a boat owner is the day they buy it and the day they sell it.
Yeah.
What's another thing you could probably do pretty bad with your...
Oh, you want a bad one? Because I have a controversial one that we could argue whether or not it's good or bad.
Give me some other bad common ones that you've heard of or seen.
A mistake I see with bonuses that it's not necessarily anyone's fault, but a lot of people under withhold, like have under withholding on it and then spend it on a consumer good that's illiquid. So I don't know, a car or whatever that you can't really get back or turn around. And then they under withheld, creating a tax liability on that. So that's a big one.
Yeah, where like the withholding is maybe like, I don't know, 20%, but their effective tax rate at the end of the year is like 30%. So they still owe, 10% to the government, and 10% of 50,000 would be 5,000. And that's, maybe you have, an emergency fund, you can use it, but is it?
That one. And then, gambling, depositing into the MGM or FanDuel app. That's a terrible move.
That was my idea. Yeah. You took it away from me. Or we think alike.
Yeah. Gambling in one of those apps is definitely poor choice generally for most people, 99.9% of people. What else? I want to throw a controversial one at you, which is, Bitcoin is down quite a lot today. You could buy a whole Bitcoin with that $50,000 bonus.
Yeah, is that something you would do? Again, it's liquid, so it's not terrible. But you're concentrating probably a lot of your excess wealth into one investment, and that's really bad.
Yeah. If it creates a concentration issue, bad. If you don't understand it, bad. If you don't know how to keep it safe, which is like not that trivial actually, to keep Bitcoin safe, also bad. Bitcoin's had, I think, a really interesting like 10-ish days. You've heard, of course, about the Trudeau Canada trucker crackdown from the financial end. Have you heard about this?
Oh, of course. Yeah.
Yeah. So on quick background, the Canadian government is fighting against this platform, protest of truckers, something about the vaccine. I actually don't know all the details. They, at a federal level, have taken pretty extraordinary measures to shut down first a GoFundMe and then subsequently bank accounts, and going so far as to, I believe, blacklist certain crypto wallets that have been giving money to organizations around this protest in Canada. So big deal for, financial crackdowns and just centralized power of money, and kind of I think a lot of people are interpreting it as a pretty extraordinary move on Canada's part. The freedom to transact on blockchains, Bitcoin specifically, seems prudent in light of Canada's moves.
Yeah, it's crazy that they're doing that, in my opinion, and that law is specifically meant for war situations and narcos and money laundering, but not against protesters. That I don't know. It just seems a little bit of an overreach when there's probably like already laws on the books that could take care of them. Trudeau is actually the fourth time that somebody invokes the Emergencies Act. The first time was World War One. The second one was World War Two. The third one was Pierre Trudeau, the father of Justin, and he rolled out the tanks on like, I think it was like an independent
like Quebec separatists.
Yeah, but I think they were using actually violence. So I'm not 100% sure about this, but I think they were using violence, and so he rolled out the tanks. And I think the people took issue that very unpopular also move, because you don't fight that kind of stuff with tanks. You fight it with law enforcement.
Yeah.
And in this case too, I think he learned from his father not to roll out the tanks, but still invoke that Emergencies Act, and just it caused a lot of backlash, even among people, among his supporters. So,
yeah, pretty extreme. So, all right, take it back. You've got this $50,000 bonus, buying a whole Bitcoin. First of all, it's an arbitrary number, 1 BTC. You can buy fractions of Bitcoin, so you could buy a balanced portfolio that includes, 1% Bitcoin, which might be a more practical approach. So it's the concentration is an immediate thing, and the other piece is, does it fit contextually with what else you have going on? Do you have unpaid debts? Do you have short-term goals that you need to save for? Bitcoin is not appropriate for any sort of short-term investment scheme. But yeah, I probably don't hate it as much as you hate it as a move.
I believe more in stocks and in ownership of companies rather than Bitcoin for now. So I would rather do, if I had $50,000 and I had to put it in one investment, I'd probably do an index fund. But you would too, I think.
Yeah, all else equal. That's just like intellectually easier. It's just like lower risk in so many ways.
I think there's other dumb things people have done with their money, which is like, buy computers. It's essentially one thing only. It's like mostly like consume it, and like non-liquid stuff that you can't really secondhand sell it, or if you do, you get a massive discount. So that's one big one.
Have you ever seen the movie Dumb and Dumber?
Yeah.
Yeah, when they go to Aspen and they finally break open the suitcase that they're trying to deliver back to the girl, and they realize it's full of cash, and they spend it on getting pedicures and new tuxedos and hotel rooms. That comes to mind if you could do that. But I mean, look, more power to you if you're really tempted to like go Dumb and Dumber in Aspen with $50,000. I think you could have a pretty good time.
Yeah, I mean, if you spend it on an experience, I think it's maybe I value more experiences than material things. After once you have enough material things.
What's a $50,000 experience?
Yeah,
safari.
I don't think that. No, that's much less. But like 50,000 for your entire family.
I
take your parents.
Yeah,
grandparents.
Right, yeah, whole family, like big expensive trip. I saw one time an advertisement for like it was for like executives, but it was a maybe 200-day cruise that was extreme luxury. Every single spot that you went, you had to book it like 2 years in advance, and I think it was $50,000 a person.
Was it around the world? Oh, I've seen one that was like 120,000, but it's for a year,
right? It's for a long time. Yeah,
meals are included. Yeah. There's a lot of stuff that's included. Yeah. You could rent out your house. Like if you get like a $5,000 per month for your house, you're talking about like
not too bad.
The net cost is maybe like it's not so bad. Let's talk about the things that you can actually good things you could do with that money. Let's talk about the smartest things. What comes to mind? Number one,
if you have debts.
Or which debts particularly?
High interest debts that exceed where the interest rate exceeds what you think you can make on investments.
Which ones do you think are the first glance?
First glance ones are always personal loans, various like
credit cards. Yeah, credit card debts
are always higher.
I think that's a given. Like most people have credit card debt, just get rid of it. Like most of that is probably at like 15% or more.
Yep.
I think there's other things. I mean, I would organize it in this priority. I'll say like, if you have a high deductible health plan, then HSA make sure you contribute to the HSA. But in overall, like make sure that you contribute to your 401ks. But before you even do that, make sure that you have enough to pay for taxes. So like if you have if this extra bonus created another tax liability, separate that money for the tax liability. Make sure your emergency fund is funded. Once that is done, focus on HSA, your retirement accounts, all the other type of accounts. And if those are fully funded or maxed out per se, then maybe a brokerage account and then invest in an index. That's like quickly what I would do. If you have kids, if you have grandkids, if this is like a late game, bonus where retirement is fully funded, HSA is fully funded, like everything, you're like a perfect, financial planning candidate where like you've done mostly everything that you needed to and you're fully funded for those things. Then maybe, a 529 for your grandkids.
I can't help but think that all the bad stuff is exciting and like good for stories, and all the good stuff is so boring. It's like taxes, like HSAs. It's like the core tension of good financial hygiene is how boring it is. Like flossing is boring too, as is, eating your vegetables, but they pay off.
Yeah, but if you do it every day, your teeth will last longer, less visits to the dentist.
Yep.
Yeah, it's hard to make those choices, but there has to be some balance, right? Like your goals should be like I'll say intermixed, right? Like one serious, very important goal, and then you have another one that's like a fun one, then a serious one, a fun one. Yeah, there has to be some sort of reward for each one.
I think our other thing that we wanted to cover today was last week we talked about this. I wanted to frame this as basically, I've seen people do this, and I think this is more popular in 2021 than this year, where investing is hard again. But back when investing was easy and everyone was a genius, you could just pick companies that you had heard of or read about online or on social media, or just like products that you liked, and make a portfolio on a pretty casual basis without doing a ton of analysis on what's in there, and come up with something kind of interesting. So I wanted to do that. I don't select individual stocks. I don't analyze individual companies for the most part.
And the ones you selected are now an endorsement or a recommendation to
Correct. So last week after our last recording, I just picked some positions that I had like heard of or liked, or I like the brands of the products, and came up with a pretty random portfolio. So I figured I'd share that portfolio with you guys on this today, and then talk about kind of the trade-offs of doing that, of taking I just want to pick some stocks and own them and see what happens approach versus a little bit more probably systematic approach that you and I might do professionally, or you might get with an index fund or a host of other kind of products.
Yeah.
I'm using a website that I really like. I will endorse this one for anyone who's looking for a portfolio, like a quantitative portfolio analysis website. It's called Portfolio Visualizer. I'm a big fan. What I did here was put in, this is 9 assets, just products that I picked that I think are companies that I have no opinion about the stocks, honestly. They're just companies where I have used or seen or interacted with the product and I thought they were interesting. So my 9 picks here are Costco, Google.
I love both of them.
This is a really interesting one. It's called Kura Sushi. I think I've tweeted about this a couple times because I went to this restaurant in San Diego in like 2019 and then realized that it was a publicly traded company and just couldn't believe it. And I've since been back.
You like it?
I do like it. It's a great experience in this restaurant. It feels like you're in Japan. It's totally robotic. You order from like this iPad type thing. A robot brings you your drinks. It's conveyor belt sushi, but also customized as well. So you can order specific stuff and it comes out on this like zoomy belt thing. And everyone's filming everything going on in there because it's very experiential. So Kura Sushi, they just opened one right by me.
Great place to spend your bonus.
Perfect use of a $50,000 bonus. Oh my God, that's so much sushi. That makes me feel sick. McDonald's, I just believe in the brand. I think people love McDonald's. Twitter, I've used Twitter for over a decade now. That's sad to say. I think it's a phenomenal product. JP Morgan, I use them for banking. Snapchat, I use that to stay in touch with friends. I think it's a good app. First Republic Bank, I heard some investor pitch this forever ago. That it was the only.
It's a great bank. It's a very customer centric.
As the very customer centric bank, and a bank like one of the few financial services companies with a very high net promoter score, which is basically a measurement of how happy your customers are with you. Yeah, that's actually an 8-stock portfolio, and I equal weighted these 8 stocks to come up with something truly extraordinarily random in how it's done. But I think that the spirit of this mimics how a lot of individual investors are just like, there's some stocks I like them, I'm going to go buy them. So I named this one Random Picks. I'm doing portfolio number 2 here as the S&P 500 as represented by the SPY ETF.
Yeah.
If we analyze these, it's only going to go back until Kura Sushi's IPO in August 2019. Yeah. So it's not that long of a back test. These are equal weighted. And no rebalancing was done on these. So these are going to get a little bit out of whack over time with no rebalancing. So it's kind of a one-time purchase. So high level here, and this is what we got.
Yeah, look at that random portfolio outperforming.
Random portfolio getting you almost 30% a year. What were you saying about credit card debt? Yeah. Just kidding. That is the worst idea you could do, is pick a random portfolio of stocks and expect it to get you out of credit card debt. Please, for the love of all that is holy, do not do that. But yeah, this portfolio, since a random time frame, has actually outperformed. Yeah. So what are your big takeaways from like high level portfolio statistics that you see?
Short term shit can do very well.
Yeah, so random things can do very well in a short-term time frame. So this is a very short.
But the truth is, if you look at that, but if you look at your picks, some of them are actually very good. Use like they actually are very good, efficient use of capital. Mm-hmm. So some of them will actually do, I think, better than the market. I just want to see something.
What would you like to see
of your picks? Like your picks in general?
Yeah, how they performed, or just what they are.
It would be interesting to see what their ROIC is, the return on invested capital, which is an indication of how good their operation.
But here's the individual performances of each of these stocks. Again, no rebalancing against any of them.
I'll tell you here, the return on capital for Costco is 26.1%. That's super duper high. Mm-hmm. If you take Google, for example, it will be also 27.6. McDonald's, it's 21.3. So pretty good. I bet you Twitter is pretty low.
Yeah, it's bad.
2.1. And Snap is negative, almost 11.
Yeah.
So you have a mixture of companies that are growing and the other companies that are like maybe more like value, but still like producing a ton of a return on invested capital. So it's a good outcome. It's a good portfolio. I mean, like, it's not a crazy portfolio.
I think it's a crazy portfolio.
I would disagree.
Fair enough.
I would disagree. I would remove. I mean, like, I know I'm not a big fan of Twitter. I'm not a big fan of Snap. Yeah. I don't know enough about Kura Sushi, but I know like Costco, Alphabet, McDonald's have a very nice strangle on their relative markets. Mm-hmm. So like they're pretty good. And then and that same thing goes by with JP Morgan. I just don't know First Republic. If they're cheap, if they're good.
Yep.
And then the S&P 500, it is what it is.
Yeah, I think that this is interesting that the S&P kind of landed.
You can look at the Sharpe ratios too of each individual company.
Yeah, you can. So the standard deviations is actually an interesting number that I like this because this tells a story that even though we started out with equal weights in each of these positions, they didn't contribute to the overall portfolio risk equally. Like, it just doesn't work like that because some positions are so much more volatile and so much riskier than others. So owning Costco, an exceptionally mature business that's growing slowly but steadily, compared to owning Kura Sushi, these are just hilariously different. A 10% position in a small cap growth stock that's trying to, expand its footprint of sushi restaurants in the US compared to owning a global footprint like Costco. It's just so incredibly different. So they really affect your risk differently. So even though Costco had a 28.5% return versus Kura's 60% return, the Sharpe ratio is better on Costco, meaning the return per unit of risk, at least in this back test, looks a little bit better. What tool would you use if you're evaluating these one by one to get those type of numbers?
Free tools, I don't know. I'm using right now Coifin for graphs, more or less, like long-term graphs, but I'm using Ticker, which is tikr.com, for a very slimmed down version of the data from CapIQ, which is like a very good source of data.
That's like a 50,000
for international
a year type.
I think it's a $30,000 or $20,000 subscription.
Yeah. All right. What's the takeaway? Spend your $50,000 bonus on a random selection of of stocks. Just kidding.
Of stocks, pay your taxes, and make sure the rest of the stuff is done for long term.
Agreed. My takeaway is shift towards the boring things. But I think there is something to be said for doing fun stuff with a little bit, especially for people who already have a tendency to get a lot of the boring stuff right. Like if you're a person who's always super organized on your taxes, you know what you're doing, you're proactive on financial planning items, setting aside some money to the other side that you say, look, you need to spend $5,000 on this on experiences, or go do something silly, or go give a gift to someone that would be really meaningful too. I think there's something to be said for that too.